Okay, so first up, let's look at what the US S&P futures are doing. All right. To understand what the market is doing now, we first have to look at the background, what has happened. Okay, so what we have seen here is that from the top here in February 2020, the market has plunged down like more than 20% into bear market territory. Sorry, Okay. What we have here on the left-hand side is the weekly chart of the S&P 500. So what we have is basically it drops is what we call a very fast selling down. Okay, and this type of selling, right, for some that I've explained on a one-on-one basis, right, is that this fast selling are mainly being triggered by forced selling, redemption, and margin call. Redemption is basically redemptions by sovereign funds or institutional funds, where they pull out from their mutual funds managers or even from hedge fund managers to so-called sidestep from the market. Okay, and when they do that, right, the funds and ETFs have no choice but to sell their holdings so that they are able to pay for the redemptions. So what happens is that when they force sales down, it creates a lot of margin calls. Because why? If you look at the long-term basis, right, this particular run is a little bit of a euphoric run. So a lot of people are like highly leveraged and they just plump all their money in, you know. So this bar, right, 1 week somehow caught all of them. Basically, this whole run, right, just 1 week, it returned all the returns, right, for this past for 4 months, you know, of rally. So this created a lot of fear, and what we have is that all the margin calls down created this drop. Okay, quite a drastic drop. So what happens is that in this, right, is what I usually term as a bear market rally. Now, why is it a bear market rally? Is that what we have is mainly short sellers covering, okay, and opportunistic traders buying the shares up. Okay, so as they do, right, it creates some kind of a rebound in this market. Now, why I also say as a bear market rally is that in the economic situation, right now we have a COVID situation. We have and this COVID situation has caused the oil market crash. All right, now how does it crash? This is the WTI West Texas oil. So as the COVID caused most of the economy in the whole world come to a standstill, right? Nobody are using oil for shipping. Nobody using oil for airplanes, no, and they are not using gasoline for cars. No, the whole economy is stopped. So there's practically no demand for oil. Okay. Now what happens is that oil will, due to the continuous production from OPEC countries, right, that the oil does not have any place to store. So people are just the traders are just dumping the oil contracts as there's lack of storage for this oil, for the storage of oil. Okay, so let's look at Dow Jones. What happens past 2 days is that during this bear market rally, there's 2 down days. Monday is down, and Tuesday is a down bar. So what we have is in the S&P futures, right? Today is up based on the Hong Kong market or Asian market has pushed the market up a little. Whatever news there is out there seems to be a little bit positive, but doesn't seem sustainable to me. Okay. Now we look at Hong Kong. What did the Asian market do is that there's a rally in the Hang Seng Index, which I would say more likely to be credited by this Shanghai Index. Why I say Shanghai is because China has somehow curbed their COVID infection. their infection rate, and they somehow have curbed it very well. So what I would say is that for this, it still looks like a counter trend rally to me. All right, and it's just that it will be following this sort of pattern. So it's like whatever rally that's going to happen, right, it seems to be losing momentum. Okay, so once this trend line breaks, right, with force, we might be looking at the second wave of down bear market. Okay, this is the Japan market. It's all most of the countries are all exhibiting the same kind of a counter trend rally. You know, it's up, down, up, down. So basically, this is how my view is on the commodity space, right? This is the gold chart. Gold chart is roughly heading towards its all-time high price back in 2011. Okay, that's the high in 19,000. Currently, it's trading at almost 1,007. Okay, but gold isn't the one that is in the real bull market. The real bull market has been palladium. All right, palladium has been on a rally since I last remember I bought palladium was at $400, and it has now rallied to a high of 2008. Okay, so this is the palladium chart. So for the rest of it, not much. Okay, so the main thing is we want to look at this gold chart, the palladium chart, because this represents the commodity, somehow the safe haven where people will sell their holdings in the stock market and place into commodities, gold, US dollar, or even Japanese yen. All right, and Swiss franc. So this Japanese yen, Swiss franc are considered safe haven where investors will put their money. So if we look at if we start to see the Japanese yen getting stronger, right, that's where you start to see investors are putting money in. Okay, so you can see the Swiss franc is also moving downwards, getting stronger against the US dollar. Okay, so most of the investors are fearful, and that's where they are placing their money, their investments. Okay, so on the Singapore side, so usually what I do is that I usually have a list. Okay, this is what I do. So I have a strong set, what I call strong stocks, weak stocks, and neutral stocks, and sometimes some pennies. All right, so let's go through some of the strong stocks. The one in question right now running is Biolytics. Okay, I shared the news on Biolytics where they came out with the news that they produce COVID test kits, and they got FDA approval to sell their test kits into the US market. And we know US market right now is the #1 in COVID infections. All right, so this is basically speculative move and trying to think how much Biolytics is going to earn from this. Okay, so most of you know that I only have one chart pattern to look at, which is the cup and handle pattern. So for those, just a refresh, this will be the cup, and then this is the handle pattern. So this make a very big run. Okay. Now for this, right, why I also know that this is kind of overextended. So for some of you, if you have or friends who have, it's time to take some profits. Okay. Associated company, ClearBridge. So it's the same thing, giving kind of a cup and handle pattern. So for those who don't understand, there are some of you who didn't are not in the Asia chart program before, is that what we have, right, is we are looking at price to trade or to buy at breakouts. So what we want is usually what we want is to have a setup for us to look at a trade to buy or to enter a trade. So what we have is here in a cup pattern. What we want to look at to buy into, right, is a breakout of the handle pattern, which is here. This is the handle pattern. And we have a resistance point here is at like 0.143, right? We are looking to buy into this stock when it hits 0.144145. You know, there's a clear breakout and a huge volume coming in. That's where we will enter. And then as it starts to move off, right, we sell and take profit. Okay, so this is mainly more on the short-term trading. Okay, and for short-term trading, right, what we want the most basic thing, there's mainly two types to deal in short-term trading. First is to trade the trend, and to trade the trend, right, what we want is to buy the stocks that are the strongest one in the market. Okay, the second method is a contrarian method, which is to short a stock that is in a euphoria, or to buy a stock that is in a panic selling. Okay, and for contrarian kind of trading, right, you require a more psychological makeup to understand the psychological of the market and market participants on how much fear and how much greed are there for you to decide where is the highest point or lowest point. Okay, so this is clear bridge. So what we have right now, the strongest sector is basically the healthcare sector that does anything that's related to COVID. You know, they produce masks, they provide healthcare services, they produce gloves, surgical gloves, protective gears, and of course for biolytics is COVID test kits. All right. So the other one is the one that ran today, MedTech. Okay, so this doesn't have a much of a it's a more bigger cup and handle pattern. So what we have is a cup and a handle. So today there's a breakout here at 103, 105, and it move off. Okay. So this is for the healthcare sector. So there are some smaller healthcare sector that UG Healthcare. So this is like the end of it. So what we want is to see how it pullbacks, and then we decide whether is there more room for it to run. Strong stocks and related to healthcare. Riverstone. So despite the sell down, together with the broad market, it managed to recover very well. This is a V-shaped recovery. So in a panic, what we call is like a panic, right? We roughly can calculate. We use like between 5 to 7 days of down bar. So we have a 1, 2, 3, 4, 5, 6 days. Okay, it's a 6 consecutive red bar, and it's roughly we can know is almost the end by looking at the volume also. Right, the volume is getting lower. This is the highest, where basically insiders are trading this market lah. Okay, so this is one of it. Riverstone that manufactures masks and gloves in the Singapore market. And okay, the one that people are so mad, going mad rush, and is listed, Sheng Siong. So Sheng Siong basically had the same sell down in the market. But basically, it did just one V-shaped recovery and make a new all-time high due to all the news and all that mad rush buying of staples. Okay, so and it doesn't really provide any clear setup for us to enter this stock. So what we have is, for those who with Asia charts, you know that there's one small little setup here, but to me it's like you're trading in such a high price stock, and there's no real base formation for this. So to me, I still will not enter this stock. Okay, Sheng Siong and SGX. Okay, SGX is there's something that I learned about SGX in this downturn, is that SGX is the one of the stocks so-called financial stocks that will rally at the start of a bear market. So what do I mean by that? Okay, let's go back to 2018. What I mean is that in the start of the bear market, right? If we look at okay, at the start of bear market, what happens is that there will be an immense amount of trading volume that happen. Okay, if we let's look at SPY. So this is the 07 08 crisis. So this is so-called the top of the October 07, and during this period, right? This period, when it's like in the top side and it started to descend, there is almost a double or triple in weekly volume compared to the rest of the time. So in this period of time, right, with the double or tripling of trading amount of volume, right, we are so-called expecting that exchange are going to make a huge amount of profits on the trading volume. So the reason for this that I mentioned, right, is that so this is 08, and then let's look at now. Okay, throughout all this rally, the volume is normal, and during this period, right, can you see the volume in fact, like went up like triple or quadruple the time of its normal volume? Okay, so with this, right, due to this immense amount of trading volume, we are expecting exchange to have much bigger profits in the months to come. So that explains for this so-called rally for SGX. If you can Google on what I call sector rotation theory. The finance sector is always the one that is the last one to end in the sector rotation theory. But for banks, right, it doesn't really happen for banks. What it means for financial sector, right, is that it is the exchange, the SGX, that is the one that is going to rally. So this is basically my theory from reading this from past experience back in 15. It also has a similar thing, it rallied before, and then it crashed due to the immense volume. So 15 it happened, 08 it happened. Okay, so this is what happened for this is what I discovered for SGX. Okay, so this is what the Straits Time Index is doing, our Singapore market. The same thing, we have a crash here. all right, and it's doing a counter trend rally. Okay, and this is the bear market line, so-called 20% drop from the recent top. So this will also become a very big resistance point for the Singapore index. And Singapore index are mainly being run by 3 banks. So what we have is the banks, OCBC. The OCBC is the one that I usually look at. You can see it's running the same pattern as the STI. Okay, so today is doing this doji with an increased volume, which is a good sign. Okay, and from here it might have a small rebound, so we have to see how the rebound turns out, and will this follow through into a second wave of bear market fall. Okay, we can look at DBS. It's the same pattern, and UOB is the same pattern. Okay, so in this market, right, we won't be expecting much from the big caps, small caps. And the REITs, mainly is that they are what I call very much undervalued. They are weak stocks. So in terms of trading, we won't be looking in this. But if you're looking into investing, right, then these are some of the stocks that we want to look at. You know, like for example, Ascendas REIT. Ascendas REIT is also doing a counter trend rally, but what we want is not to buy now, but to see that if it falls, we will want to buy them when it reach like about 5% yield. Hardly we can see Ascendas REIT giving a 5% yield. We have a question for banks. What kind of volume should we be looking if we want it to come down? So if we want it to come down, right, what we want to see is that come down to invest. Okay, to invest in banks when it comes down, right, what we want to see is that there are few scenarios. First scenario is that when it drops to roughly in the $8 area, okay, this is where the current support is. So if we were to fall to $8 area, right, if the volume were to thin out very small, you know, and it starts to inch up, right, that is roughly where we can start to buy in a little, because we may not be expecting a second wave bear market. Okay, but if we were to break this support, right, you will have to come in with volume, and if that happens, right, with a down bar, then what I call is we have to wait longer for it to move or to have such a move. And right at the bottom, so the volume will be like something like this, you know, low volume, and then as it goes all the way down, right, the volume will pick up to the so-called peak and the highest. That's where you want to look to invest. Okay, so there are 2 scenarios. First scenario is over here. Do we see a very low volume, thin volume to invest? If it's very low volume, then probably the sellers are done, the buyers are hesitating, and we're left with institutional who are accumulating. So if it happens, right, and it starts to form a base, that's where you can start to pick up later, and we can go full in, right, at the breakout of the base, depending on how this price pattern turns out. Okay, so what else? Okay, there are a few interesting stocks. What I had is like when I discussed with a friend of mine, Chris, we do note that the tech manufacturing sector are the ones that have the greatest rally from a bear market. So this is Venture Corp. Okay, and what we want to know, there are a few like Venture Corp. The stronger one is actually AEM. Sorry. Okay, AM is the strongest among the so-called tech manufacturing companies. All right, so this might be the leader. Okay, so depending on how it turns out, if it continues to stay up high after all the COVID situations and that, then I think investing in or trading in AEM makes a better choice. But for those who want to look into value, then venture would be a good choice. There's also Valuetronics. Okay, so at this moment, Valuetronics is still doing a so-called, it seems to me, a counter trend rally, which means I will be expecting more downside to happen. And UMS, same pattern. It's like a counter trend rally. So I will not be looking to invest in this too early. So a lot of stocks that I look at, right, is that they are all exhibiting a counter trend rally, which means to say in the broad market sense, the market is likely to fall for a second wave of bear market. Okay, so I'm limited by Zoom. We only have 30 minutes. So for this, for those, okay, for some of you all who are traders, right, let me give a few more. These are basically penny stocks if you are looking to look at Asia Medic and Asia Force. Asia Force has bounced off 200-day, forming a nice cup and handle pattern with increased volume today. Testing the. So these are some that you can look at if you want to trade the pennies. So, but right now it's like it's dangerous period. The market is shaky. Our Singapore COVID count is climbing up. So just stay safe in the market. Trade only those that you think you're quite sure of and confirm of. Okay. Thanks, guys.